Let's now move on to the markets. In Nigeria, it's becoming pretty easy to predict these days. The market is trending lower. Today, we saw the NSE All Share Index falling to 32,784 points. That's about 0.5% loss from the previous session. We have seen the market come under a bit of pressure from profit taking these days, and the same today. We did see some brewers and cement companies like Dangote Cement falling back today. Indeed, Dangote Cement is now down 9% over the last week. And let's move on to the fixed income market, and standing by for that discussion is Thaddeus Udegbe from Diamond Bank to give us his thoughts on what is going, the volatility we're seeing in that market as well. Thaddeus, thank you for joining us. I think a good place to start is the uptake, or should I say even the lack of it right these days, in the open market operations that the central bank, of course, has been using to mop up liquidity. Can you just talk us through what is going on there? Because what we're hearing is that people, or rather investors, seem to be sitting on the sideline and not taking up as much of the OMO bills as have been offered by the central bank recently. Hello, Thaddeus, can you hear me?
Yeah, I can hear you. Sorry. Yeah.
All right,
yeah.
I wanted to get your thoughts on the OMO bills and the uptake from investors these days. It seems it has slowed down over the last few sessions.
Okay, this week has been an interesting week in the fixed income market, particularly at the treasury bills market. Yesterday there was OMO auction. Today there was also OMO auction. At yesterday's OMO auction, CBN offered 150 billion naira worth of treasury bills in 3 maturities. Eventually, the subscription levels came in at 66 billion naira. CBN sold 45 billion naira, which is far lower than expectation.
Right.
At a simple weighted average rate of about 10.3%. Today again, CBN offered 200 billion naira worth of treasury bills in 2 maturities. Subscription came in at about 94 billion, which is far lower than offer.
Yeah.
And then market, the central bank sold at the end of the day about 76 billion. Okay, in 2 maturities, a simple weighted average rate of about 10.45%.
The big question is why the market isn't buying up these OMO bills. Can you talk us through the reasons for that?
Well, we've seen some apathy play out in the market, but at the OMO segment, which has also impacted negatively at activities at the secondary market. If you look at the treasury yield curve, you find that the yield curve is looking flat now, or a bit inverted, given the fact that investors are no longer showing much of interest this week. I do not have exact reasons why investors are shying away from the OMO auction at the moment.
Okay,
but I do think that this trend is going to impact the NTB auction that we are expecting by Wednesday this week. CBN has on plan to sell about 140 billion worth of treasury bills in 91-day, 182-day, and 364-day treasury bills. If you recall, at the last auction, NTB auction, central bank sold 91-day at 9.2%, 182-day at about 9.45%, and 1-year bill at 9.54%. However, with the trend we're seeing in the market today, with the lull in activity at the secondary market, with the rise in yield at the OMO that was done yesterday and today, we think that yield will come up slightly higher at this NTB auction.
Okay, I think maybe a bit worrying to see that the OMO auctions have not been very effective in mopping up liquidity. As we approach an MPC decision in another 2 weeks, your thoughts on whether or not the central bank may try to use new tactics to mop up liquidity, or do you think it's really going to be a question of moving those yields to levels that will be attractive for investors?
Well, I think the question of looking at other options may have to come into play this time around, given the fact that I think the central bank is also more worried about the cost of open market operations. If you look at the data that we have year to date, central bank has sold about 2 trillion worth of treasury bills at the open market operation, which is also very, very aggressive, even though the yields are not quite high. But if you look at the cost, you find that the cost is very, very high. So I think central bank would have to look at other ways of managing liquidity, because the liquidity in the system is very huge, and the pressure is beginning to be felt at the exchange rate.
And of course, one of those options will be to tweak the cash reserve ratio, to tweak the liquidity ratio for banks. Your thoughts on what is likely in that respect? Do you think any of those ratios will be tweaked at the next MPC?
At the moment, the CRR for me is too high. At 12%, it's already hurting banks, because if you look at the effective volume that banks have put out of circulation, you find that it's very huge. It's running to over 100 billion. So I think banks will not like to see CRR rise again. It will be a very harsh policy for central bank to adopt at this time, given the fact that banks are expected to lend to real sector to boost the economy. So we don't think raising CRR should be an option at this time.
Well, everybody waits and see
Yes.
waits and sees to see what the central bank will do. But let's move on to the naira. Naira, of course, strengthening over the last few sessions. Talk us through what is going on there, because at some point last week, I think there was some mild concern as to where the naira was going. It was at a year low, but now it's strengthening to 157 naira 30 kobo to the US dollar.
Actually, we've seen renewed volatility at the interbank market of recent. Last week, the market depreciated significantly by over 90 kobo, traded to a high of 158.50 levels. However, this week, the market rebounded, the FX rate rebounded at the interbank market. It opened at 158 figure and then traded to a low of 157.30, appreciating by over 70 kobo. The appreciation was due largely to ample inflows from oil companies. The state national oil companies sold huge volumes of FX, and some other multinational oil companies. In addition to this, CBN also increased offer at the WDAS of yesterday. CBN offered $250 million and eventually sold $234 million at 155.75. So if you look at the trend, you find out that there is increased supply of FX to put the pressure on the exchange rate under control.